Welcome back to Luminous Star Fables, where survivors learn to rebuild their emotional, spiritual, and financial identity with clarity, compassion, and power. Today, we're stepping into a topic that many survivors quietly struggle with, and that is how to rebuild credit and financial stability after years of instability, trauma, or financial control. This isn't just about numbers, it's about reclaiming your sovereignty. Narcissistic and emotional abuse recovery is very challenging, but this does not mean that survivors are doomed to financial ruin because of it. Rebuilding your financial identity is a powerful addition to your support base while recovering from narcissistic financial abuse. Financial rebuilding is not a race. It's a series of intentional moves that slowly reshape how lenders see you and how you see yourself. Many survivors carry the belief that they're bad with money when they were never taught the rules of the system. Today, we're breaking those rules down in a way that feels safe, grounded, and doable. Let's begin with the foundation, demonstrating reliability. Lenders don't know your story, your resilience, or the battles you've survived. They only see patterns, and one of the most powerful ways to create a new pattern is by borrowing against your own funds. Secured credit cards and credit builder loans allow you to use your own money as collateral. This removes the lender's fear and gives you a clean slate to build positive history that belongs to you. Another overlooked strategy is transforming your everyday bills into credit-building opportunities. Most people pay for utilities directly from their bank account, but those payments never get reported. By routing those same bills through a credit card and paying it off immediately, you turn invisible expenses into visible proof of responsibility. This alone strengthens the largest part of your credit score, your payment history. Timing is another quiet superpower. Survivors often feel overwhelmed by due dates, but the truth is, the due date isn't the most important moment. The statement closing date is. By making 2 small payments each month, one about 15 days before the statement closes and another just a few days before it, you ensure that the balance reported to the credit bureaus is low. This keeps your utilization healthy and signals to lenders that you're in control. Now let's talk about something many people misunderstand. What to do after you're approved for a new card or a credit limit increase. The instinct is to celebrate by using the card right away. But experts recommend a pause, a 30 to 60-day window where you let the new limit report at a 0 balance. This creates a cushion in your utilization and can trigger a noticeable score increase before you ever swipe the card. Your relationships with financial institutions matter more than you think. If you've been paying a mortgage or major loan on time, that lender already has a private record of your reliability. After 6 to 12 months of consistent payments, applying for a credit card with that same institution often leads to higher limits and easier approvals. You're not starting from scratch, you're building on trust you've already earned. When you're ready to expand your credit profile, spacing out applications is essential. Applying too often can make you appear desperate for credit, even when you're simply trying to rebuild. Giving yourself 3 to 6 months between applications allows your score to stabilize and your new accounts to mature. This entire process is not about spending more money, it's about managing what you already have with intention. Survivors often feel intimidated by financial systems because those systems were used against them. But once you understand the rules, the timing, the reporting cycles, the psychology of lenders, you begin to see that you're not powerless. You're strategic. Rebuilding credit is not just a financial journey, it's an emotional one. Every on-time payment is a declaration of self-trust. Every low balance is a boundary. Every approval is a reminder that your past does not define your future. You are not behind. You are rebuilding. And rebuilding requires patience, compassion, and strategy. As you continue this journey, remember, your financial identity is part of your healing, and every step you take is a step towards sovereignty.
So, you're mastering the monthly tactics. Now what? It's time to zoom out and think bigger. Let's talk about how to leverage everything you've built for some major, long-term credit growth.
Okay, here's a piece of advice you probably haven't heard before. Stop applying for credit with total strangers. Seriously, think about it. The banks you already do business with, the ones who see your paychecks coming in, your consistent history, they're your warmest leads. That trust you've already built is your unfair advantage.
So for example, let's say you have a mortgage with a bank, and you've made a solid year of on-time payments. You have built an incredible internal track record with them, so when you go to apply for one of their credit cards, they don't just see a random application, they see a reliable customer they already know. This just dramatically increases your odds of not just getting approved, but getting approved for a really high limit.
And when you are ready to apply, you gotta be strategic about where you go. Not all banks are created equal when it comes to handing out high credit limits. These guys, for example, are known for being more generous with their starting limits and giving you more room to grow over time. It's all about playing chess, not checkers, making every single application count.
And just remember, patience is a huge part of the strategy. Applying for a bunch of credit too quickly makes you look what they call credit hungry. It looks desperate to lenders. The pro move, wait at least 90 days, sometimes even up to 6 months between applications. It shows confidence and it shows you're in control.
All right, we have covered some seriously powerful strategies. So let's boil it all down into the final architect's blueprint that you can literally start using today.
Here it is, your 4 key plays. First, master that 15/3 rule to keep your utilization under 10%. Second, use the 30 to 60-day hold to get a score boost from new limits. Third, leverage the banks that already know and trust you. And finally, be patient. Space your applications out by at least 90 days. This is it. This is how you architect an exceptional credit profile.
And remember, this whole thing isn't really about a number. It's about building opportunities. It's about what that number unlocks, whether that's a home, a business, or just a better future for your family. You now have the exact same blueprint the experts use, so the only question left is, what are you going to build first?
So